Good afternoon and welcome to the July 12th USDA Crop Report Analysis webinar from INTL FCStone. We're glad to have you back here this month. We've had a great interest in these webinars and we hope that we can continue to meet your needs with them. We want to take a look today at the USDA Crop Report and its implications for the grain and oilseed markets and where we think we go from here with the markets. And to do that, of course, we need to start by talking about the fact that we have money flow that affects how the markets react. And the price is still a function of supply and demand, but is modified by the flow of money. So you'll see me put that slide up as a reminder frequently because I oftentimes will get questions from the traditional fundamentalists in the market. Why is the market behaving the way it is based on the fundamentals? Heard it today. Isn't the market behaving strangely to it? No, it really has to do with the environment of money flow. Another question, shouldn't soybeans have a larger risk premium in them? Why do they not? It really comes back to money flow and where we are in that money flow cycle. And we see here a weekly CRB index chart. Now, as I said, this is a weekly chart, and we see the trend line in the lower right-hand corner showing the coming off of the winter lows. We have pulled back here in recent weeks. This summer, a little bit of consolidation. We had pretty aggressive gains in this market early on. First a short covering, and then some new length or ownership built by the funds in the commodities as a whole. A little bit of consolidation pullback, but if you look at the various major commodity indices, the overall uptrend has not been violated at this point yet. That's significant because when we look at the connection between the CRB, which is this orange line, and money invested in the value of that investment of the funds in corn, soybeans, and wheat, we do see a good correlation. In fact, a correlation of 0.72. We consider any correlation of 0.70 or better to be a pretty strong correlation. And of course, a one-to-one correlation would be if A goes up by a certain amount, B goes up by the same amount. So 0.7, pretty good correlation, and that's another reason why we follow the money flow, because it does have a significant impact on the flow into the grain and oilseeds as well. Now, as we take a look at the last 3 months, provide a little bit of perspective, we see that sugar has been the top performer over that period of time. This is as of yesterday when I created this slide. Soy meal comes in second. It's really been about protein driving the grain and oilseed complex. Couple of factors there in play. First of all is the lower quality of the Argentine crop, largely due to weather problems at harvest time there. And the second factor is the strong demand continuing into China as they try to expand their hog herd. And so that strength in that demand for protein continues to drive it. Soybeans coming in here just below soy meal. Corn and wheat actually seeing a decline in values over the last 3 months, a net decline. And so now they're looking to see if they can catch on to soybeans, if soybeans have a run here yet, and see if they can catch on and hang on and get a little bit of strength. But overall, they have much weaker fundamentals in their balance sheet than what do soybeans at this point. Now, as we look at the numbers from today's crop report, I'll start first of all with wheat. That's the more bearish fundamental story. Big crops get bigger, and we're certainly seeing that play out. All wheat crop, 2.261 billion bushels. Trade was expecting 2.159, so better than a 100 million bushels above the average trade expectation. I was looking for 2.24 billion. It got a little bit bigger even than what I anticipated, and as I said, big crops tend to get bigger. Hard red winter wheat crop was the greatest area where I missed it. I thought I had a sizable increase in there, 1.589. That was up 82 million from the previous month. I thought that would be a notable increase for USDA, but USDA was more aggressive, and I think that speaks to just how good the hard red winter wheat crop is. Overall, I guess I'm looking at all winter numbers here. You see the hard red winter, 32 million above my estimate, and 66 million bushels above the average trade guess. Soft red winter wheat crop, coming in larger as well at 370 million bushels, 13 million larger than what the trade was expecting, and 16 million better than what I was looking for. The white wheat number coming in pretty close to my expectation, larger than trade expected. Here is probably the surprise for me. I know we've had some declining crop conditions, particularly in North Dakota, but a little smaller hard red spring wheat crop than what was anticipated. And Durham, it's a typo on my part. That should be 0.083. I apologize for that. 0.083 or 83 million bushels. And again, total wheat at 2.261 billion. If we look specifically at where those increases were, 8 bushel increase in the state of Kansas. We're hearing repeated yields in even western Kansas, where 40 bushel is a good year, coming in at 80, 90, even 100, 105 or more bushels per acre. Tremendous year, and I do expect this number to go up. 28% of the winter wheat crop in Kansas. That's just a tremendous accomplishment, but really all the way through the plains, the yields have been really good, very impressive. Considering here in the southwestern plains in early April, we were looking at a crop failure with very intense drought, and then the rain started. We commented on the time what a multi-million-dollar rain it was, and the rains kept coming, and the wheat responded. What an amazing crop that it is. The problem is with the high yields, unless you are very intensive in your management, that means the protein is low. That makes it more difficult to market on the international market. That means that those surplus bushels need to fit into the feed stream, need to price themselves into the feed market. And many of those feedlots that we see, there's a big concentration in the plains, still not overly excited about wheat. There's a lot of leftover grain, sorghum, and corn in that area that's trying to race wheat lower on the cash market to not be displaced. So that's why we have wheat prices below marketing loan level here in the plains, and why we probably have a lot more problems for this market ahead. Now, as we look at the corn and soybean market, since USDA was not expected to, nor did it adjust its yields for corn and soybeans here in the United States, it did adjust acreage, bringing them in line with its June 30th survey results. The real mover was going to be in the South American crop size, because the South American crop gets bigger and or larger, that affects U.S. exports, and so USDA making adjustments to South America's crop size and then making adjustments to the demand side of the balance sheet here in the United States. Argentine corn crop at 28 million, bigger than anticipated, closer to last year's crop. Soybeans at 56.5 million metric tons. Not too much surprise, a little bit bigger than expected, but not too big a surprise there. Brazil, let's start with soybeans, came in right as I expected, just a tad over what the trade is expecting, a little bit smaller than last month. But look at the corn number. Now, CONAB last week, which is Brazil's equivalent to USDA, lowered their corn production estimate to 69 million metric ton, down from 76 million metric ton previously. Our crew in Brazil, our research team in Brazil, pegs the crop currently at 73 million metric ton. Now, they've been among the lowest of the industry estimates all growing season. They've done an excellent job down there. They feel like CONAB's gotten a little bit ahead of themselves. Yes, it may be a 69 million metric ton crop. It may be smaller than that, but they feel like that CONAB made some assumptions about some areas on what yields will be in some unharvested areas, and some areas that is really recent in corn production expansion, that we really don't have a history on yet. So they would like to be a little bit more conservative and wait to see how the yields actually come out. It's important to point out here, now CONAB's estimates can move around quite a bit, and part of it's due to the methodology and how they develop their estimates. Starting in August, USDA walks the fields here in the United States. They pull corn ears, they weigh those ears, they count the rows around the ear, they count the kernels, they do everything to get an objective yield estimate, and then they also survey farmers, etc. Well, in Brazil, the safrinha corn crop is planted over about a 3-month period of time. Makes it pretty difficult to find a particular window of opportunity where they can go out in the fields and do what USDA does here in the United States. So they simply survey people down there, survey farmers. What do you think? Well, with all due respect, and I come from the farm myself, when it's hot and dry, what's the attitude tend to be in farm country? Oh, the world is coming to an end. Tends to bias the surveys. And so that means that CONAB will sometimes lower their estimate too much and then have to raise it back later on. And that's, again, why our team in Brazil is sticking with the 73. And now if you see the industry surveys, you'll see that my submitted entry was above that, and that's because I had to submit it before our team in Brazil finished doing all the work, traveling all the country, and coming up with the estimate. But they're looking for 73 million metric tons. Now, as you reduce the size of the safrinha corn crop, that's an almost direct one-to-one relationship of then reducing exportable supplies from Brazil. So then the question comes, where do those bushels come from? Do they come from the United States? Do they come from the Black Sea? Or do some of them come from the surplus wheat in the world market? Now, how does that translate then into ending stocks? Excuse me. See if I can maintain my voice through, and we'll keep moving here. Old crop ending stocks USDA pegged at 1.708. That's 50 million better than what I currently have them at, mostly because of on the demand side and some disagreements, placement here and there, but really pretty close, and the real focus is on the new crop, which we'll look at here in a little bit. On ending soybean stocks, USDA put them at 370 million bushels. The trade was looking for 352. I was looking for 350 in this report. Now, new crop, here again, this is what's really driving the market at this point. As we said, wheat, 1.105 billion bushels. Very close to the trade estimate of 1.107. I was looking for something larger at 1.206. Couple of reasons for that. The first of which is I feel like USDA was too aggressive in raising its feed estimate based on what we've seen to this point. I guess it depends on how you want to argue it. To this point, we have not seen sufficient shifting toward wheat to justify raising the feeding estimate to 300 million bushels, up from 162 or 164 last year. But from the other standpoint, what USDA is doing is making the assumption that the wheat market will eventually find a way to make its way into the feed stream. And if that's the case, then they could probably go higher, maybe 350, maybe even 400 million. We'll see how effective it is. If not, then we have a bearish problem for wheat next year as well, particularly hard red winter wheat. On the corn side, 2.081 billion bushel carryout for new crop. This is for the marketing year starting September 1. Trade was looking for 2.2 billion. I was looking for a little over 2.2 billion as well. And basically, the trade, as well as myself, a little bit skeptical that USDA perhaps has their demand numbers inflated, particularly their feed usage estimate. Now, they did lower feed usage from 5.55 billion down to 5.50 billion, so down 50 million bushels. But with 100 million more in wheat and likely that going up, in fact, wheat overall is up nearly 140 million from last year, and probably more going into there, plus the grain sorghum. I think it's going to be difficult to hit that 5.5. You can make an argument that it'll be difficult to hit their export number as well, but that comes down to whether you believe the Black Sea is going to produce or not. Black Sea does see an increase in acreage, and I don't think USDA's production numbers fully recognize the potential for the Russian and Ukrainian, particularly Ukrainian crop. At the same time, they are starting to see some heat and dryness affect the area, particularly in the eastern third of Ukraine and edging into Russia. If that continues and expands, then Black Sea won't be able to displace all the corn exports lost out of Brazil, and that raises our export target closer to where USDA has it. If not, if the drought doesn't affect the crop and it goes away and they get the rains and the cooler temperatures, then I think we're looking at problems hitting USDA's export target. On soybeans, 290 million bushels was USDA's new crop estimate for stocks, very close to USDA's estimate, the trade estimate, 287 million. I was at 316 million bushels for this report, estimating what I thought USDA would do. My final estimate, though, is closer to 228 million, I believe it is, but we'll look at that in more detail here in a little bit. Now, as we look at soybeans in particular, I want to bring this chart back up. I first showed you this chart last month. Final soybean stocks relative to USDA's July new crop estimate. And overall, over the last, going back to 1995-96 marketing year, USDA's July ending stocks estimate has averaged 84 million bushels too high. And if you just look at those years that they were too high, it was an average of 114 million bushels. There's simply not room in the balance sheet for that kind of correction lower, USDA being off. So that's, again, why the funds who see this data are bullish soybeans right now. If we look at corn stocks, we see that overall corn stocks are continuing to slip modestly. Even though they're increasing domestically, slipping globally. And from a historical standpoint, we're really dealing with a just-in-time supply, especially relative to the mid-1980s. Same is true when you combine corn and wheat together. Now, where do I see things going? Here again, this is a parameter of possibilities that we see. On the left, you see my ending stocks estimate for corn, new crop corn, as I anticipate it being the more likely scenario and what that would translate into from a cash market standpoint, a marketing year average cash price. And then the next category, the next column in the middle, would be a more bearish scenario of a higher yield, maybe softer demand. And then on the far right would be a more bullish scenario, maybe a little bit stronger demand, maybe a little bit lower yield. So that kind of gives the parameters of the likely range. A little bit more detail. I'm using a yield of 166. I'm using USDA's acreage here and a yield of 166. That's below where USDA is currently at 168. I have a little bit softer demand for feed usage and a little bit softer for exports, and it gives me ending stocks of about 2.3 billion bushels. Based on what has already been priced and the behavior of the market I see, that would give a marketing year average cash price around 360 per bushel. If, on the other hand, we get a yield of 172, then all of a sudden we push that ending stocks number up to 2.8 billion bushels. Marketing year average price drops to 305 on a cash basis. If, on the other hand, we do bring in stress in, maybe affect pollination a little bit here at the end. Looks like the high pressure ridge next week could be a factor for maybe 20% of the pollinating corn. If it lingers longer, of course, the effect could be more. And then we have, here's my biggest concern, warm nights. Warm nights, I think, through late July and August could do more to take some of the cream off of this crop. But if that's all that we're dealing with, then we're not dealing with a short crop. We're just dealing with taking some of the top off the crop. 158 yield, giving ending stocks of 1.2 billion bushels. That would suggest a marketing year average cash price of 495. Now, we probably would see the board run considerably above that, but the cash marketing year average cash price be a bit lower because the amount of corn that's already been priced at lower levels. Looking at soybeans, here again the same type of scenario, building the parameters around the more likely scenarios. What I anticipate over here on the left is a yield of 45.5. Now, I'll very likely be adjusting that yield over the next 2 to 3 weeks as the weather pattern for pod set and pod fill becomes a little bit more set, and we have a little better feel for it right now, than what we currently do. USDA is at 46.7. That's 1.2 bushels above where I'm currently at. So I'm assuming some modest stress on the soybean crop in the month of August, and I'll talk about that a little bit more. 228 million bushels would suggest a marketing year average cash price at 10.95, probably a board price above that, but we've already seen a lot of new crop soybeans priced already, which is why the cash price wouldn't be higher. If we push that yield up to 47 bushels per acre, here again I'm using USDA's acreage, and push the yield up to 47, well then that would argue for ending stocks going to 464 million bushels, marketing year average cash price at 9.10 per bushel. If, on the other hand, we pull that yield down 5% from where USDA currently has it to 44 bushels, 44.4 bushels, that drops ending stocks down to 162. I actually even ration demand a little bit to get that level, and that leaves a marketing year average cash price at 12.20 per bushel. Again, the board would probably rally quite a bit more than that, but there's been quite a few soybeans already priced, therefore the parameters that I have. Here's what's driving it, demand story into China. And as you note here, the trend line, parabolic in nature, demand going into China. Feeding margins are strong. They've been near $100 per head. Feeding margins in the positive. That stimulates expansion. That stimulates growth and demand for soybeans, for protein primarily, the soybeans to grind, to crush, to make that soybean meal. If you look at this trend line, we've only fallen below it really twice, and those are both during economic recessions, 2008 and also 2003. I guess you could argue 2001 here was a little bit below it. I would argue that we are not seeing a depressed economic times in China sufficient, in my opinion, to justify this below trend here in 2016-17. And based on what we're seeing out of China, I expect this number yet to grow. Imports in could eventually top 90 million metric tons based on the history of China and what developments we see there. Now, let's talk about the weather. Top here, we see the 1 to 5. Well, on the left-hand column is the temperature forecast. The right-hand column is precipitation forecast. This is from Commodity Weather Group. The top is the 1 to 5 day outlook issued this morning. Generally mild temperatures, with the rain sinking into the southern Midwest. 6 to 10 day, the heat starts to return. The Midwest starts to dry out. Heat intensifies in the 11 to 15 day. This is part of the big discussion right now in the trade and why largely we saw the big response in the market that we did today. And the Midwest further dries out. We don't see any dome of doom at this point, as they say, and when you get those high pressure ridges that really lock in tremendously dry. But with the amount of moisture now in the Midwest, I think we will see those nighttime temperatures being held up. It'll keep the highs down out of the hundreds probably, more in the low to mid 90s, but the bigger threat will be those nighttime temperatures up into the 70s for much of the Midwest. And if that lingers through the last half of July into August, that can affect corn yields even more so than soybeans, but soybeans have the tight balance sheet. As we look at the 16 to 30 day, and we see this warmth continuing the bias, but the real concern is here the August outlook. Notice the heat building. Now this heat has shifted a little bit more east than what Commodity Weather Group was anticipating. That does have some positive implications for the western Midwest, particularly as we fill in a little bit more rain in the western Midwest. So the real concern here is you can have heat I talked about nighttime temperatures for corn, but let's focus on soybeans because we really can't handle more than a 2, maybe 3% reduction in national average yield for soybeans, or we have to start rationing demand. We have this area in the northeastern half of the Midwest, well, maybe northeastern third of the Midwest around the Great Lakes, below normal precipitation. Keep in mind that this is up to 50 days out. It's just July 12th. So this could change. If this area of below normal precipitation shrinks between now and what verifies, then we could see better moisture, Yes, warm temperatures, but pretty decent yields, and we could see this premium in the market evaporate pretty quickly. If, on the other hand, it expands further to the south and the west, then we could have a much more significant problem on our hands, particularly for the soybean market. And here again, as I say, the soybean balance sheet is the tightest. So if there's going to be problems, if we're going to sustain a rally, it probably will need to be led by the soybean market, and much of that should be determined here over the next few weeks. Now, as we look at crop ratings, each one of these green bars represents what the crop condition index score was in this particular week of the year, looking back over the last 30 years. The blue line is the final yield for that year with this year's estimated yield, and we see the trend line drawn on here as well. And you can see for both corn and soybeans, as of July 10th, our condition index scores were in the top 25% of the last 3 decades. My models currently project a corn yield as seasonally adjusted models at 173.2 bushels, for soybeans at 48.1 bushels per acre. So the real question is now, how do we finish off the crop? Those are yields that the current condition ratings justify, but how will we finish off? If we look at, and this is just the 4th year of my models, overall my corn yield has been to the high side each of the last 3 years, once by 9/10 of a bushel, another time by 8/10 of a bushel, and last year by 1.9 bushel per acre. On soybeans, been a little bit on both sides, a partial bushel generally on both sides of where the final yield ended up coming out for the most part. So we'll see where we play out on that. Now, take-home points, and then get your questions in, and I'll start addressing your questions. The focus is now on weather, on daily weather updates. In fact, 4 times a day is the weather's update. We're back in a weather market. In fact, I would argue the report came out at noon Eastern time today, and within about 30 to 45 minutes, we had shifted to trading weather. And I think that's the main story now. Soybeans are the most susceptible to a tight balance sheet, much more so than corn. Soybeans need to see a trend yield produced. If we get that trend yield, then the bulls have to look to South America and La Nina's effect on South America production for a story, or an excuse for a story. If we do get the stress, then this is a market that's energized and ready to go. Cash wheat is the anchor around the corn market. It's the real problem. We just have too much wheat, not only domestically, but worldwide. It's going to have to be fed. Crop ratings, keep in perspective, are among the best, top 25% of the last 30 years. So the next few weeks will go a long ways toward telling us if this year's market run is over, the highs are behind us, or if we have new room to roam, particularly with soybeans. So with that, we'll wrap up our presentation. I thank you for being with us today, and what I'm going to do now is I'm going to open it up for questions, and you can put your questions down, and I'm going to try to pronounce your names. I apologize if I don't get the names right, but Aravind says, hi Arlan, is it true that cattle started on wheat continue to be fed wheat through their life cycle? If so, is this an increase of 100 million bushels a long-term commitment in order of years as the life cycle of cattle get really longer? Excellent question, and I would answer it this way. They've largely come into the feedlot on wheat pasture, and therefore our placements have been at heavier weights because we had very lush wheat pasture this year, particularly those in the southern plains where they were held on to wheat longer. And so they came in at heavier weights. That was basically cheap gains for them. Now, as they come into feedlots, still most of the feedlots we're talking to are still on corn and or grain sorghum. But if they do make the switch to wheat, and some are starting to do so, and the wheat market's going to try to convince more of them to do so, then they generally want to stay on wheat for the duration of feeding that animal. So depending on the weight that it comes in, maybe 90 to 120 days on more of a wheat ration, because the feedlot does not want to change their ration significantly while they're on it. So they'll try to buy all the wheat they need at this time if they're going to do so, so that they can go ahead and finish the cattle they buy, the pens of cattle they buy, that they start on a wheat ration, they can finish them on a wheat ration. And here's a question from my good friend Wes out in the Texas Panhandle. It says, you spoke of the growing protein demand into China. What do you see regarding continued milo imports into China? Is registration of importers going to continue to limit purchases as they feed old, poor quality corn from the state storage? And here I'd say this is a little bit better picture than what I anticipated. I felt like that once they started selling reserve corn, we would see the grain sorghum shipments to China pretty well shut off. They have slowed, but some of the older corn being dumped onto the market in these reserve auctions has been of such low quality, we're seeing people, end users, buy U.S. grain sorghum and or corn in order to blend with it to try to bring the quality up a little bit. So that has provided a little bit more demand, but overall we're seeing a slowdown. And we saw it in USDA's numbers this morning. Grain sorghum exports for next year, I think dropped, if I remember the numbers correctly, down to 200 or 220 million bushels, down from 330 million this year. Zach, thanks for an insightful presentation. I appreciate Zach. It's those of you out there that make it, so make it work. So I'm glad to have you on board. I was wondering if you think we have found the bottom of the market, or do you think we have more downside to come? Tell me what the weather forecasts are going to be over the next 3 weeks, and I'll answer that question. I really think that's what it comes down to. If, in fact, next week's high pressure fizzles and we do not see forecasts for heat in August, let alone if the moisture is sufficient, then I think the highs are behind us and we'll probably be looking at new lows across the board. If, on the other hand, we do see intensification of high pressure, both heat and dryness, then soybeans in particular probably have a lot of energy ahead of them, and we probably haven't seen the beginning of things yet. Different, Zach. How is the good to excellent soybean crop going to affect soybean oil price in the future? And it's really the vegetable oil complex that started off being the tightest and started the money flowing toward the oil seeds this last winter. So that is a factor we're looking at. As we look at the oil content, the nighttime temperatures certainly can affect it. How we mature through the month of August can certainly affect the oil content going in. But when we look at prices overall, I think the soy oil price has probably underperformed, and soy meal has probably overperformed. And so at some point, just the natural history of things, we tend to see that spread correct itself. But the timing and what may happen between now and then is, I think, a subject to debate. With the yields coming in, that'll certainly affect it. And I just think, bottom line, it's just too early to really have a handle on what that oil yield is going to be coming out of this crop. It's really going to be determined during the month of August, and of course having an impact on the balance sheet then. Any more questions out there that we may have, go ahead and put them in now. I'll give another minute or two for you to be able to submit your question. I think the bottom line from this report, a big wheat crop, and big wheat crops get bigger. The real question is now how much protein. I think protein is going to be in tighter supply. We had some significant problems with the European crop with lingering rains during harvest time. And looking at like maybe about 2/3 of the Ukrainian crop could be a feed quality as well. We look at the lower protein in the U.S. crop. Certainly a lot of feed wheat there, so we need a good protein hard red spring crop, and of course that leads us to then to the Canadian spring crop and what it's going to be protein wise. That is the drag on the corn market. So as corn prices get pulled higher by soybeans, if we have a rally in soybeans or a weather threat to the corn, then we pull more wheat in. Aravind comes in with another question. One more risk to the corn production worldwide is the heat that is forecast across the world in the coming months. Although too early to be reliable, there is a good chance of increased temperatures by the time corn enters the crucial stages. Any thoughts, Arlan? Like I said, at this point, with the amount of moisture we have in the Midwest, I'm mostly concerned about nighttime temperatures. That does not hurt yield as much as heat at pollination in the daytime temperatures, but it does take the top off, and so I think we're looking at very possibly a low to mid 160s yield. But I think we need to drop below that 158 yield to really have a bullish balance sheet, particularly with all the wheat out there to be fed. Now, if you look elsewhere in the world, obviously we saw already the safrinha crop in Brazil hurt by heat and dryness, and we are seeing some heat and dryness build for Ukraine. That, I think, is the next thing to watch because a lot of the export business will go to them that Brazil is unable to fulfill if they have a big crop. But if that heat and dryness expands, then that turns our balance sheet a little friendlier. But keep in mind that wheat is going to fill a lot of that need on the global market as well. Overall, we do seem to be pulling into this La Nina pattern, and we're just on the cusp of La Nina right now. We are in a little bit more of a high-risk time weather-wise, and that's why the funds have been putting money into the markets. Andrew asked, do you anticipate continued weather problems in South America? Well, the typical La Nina pattern is for warmth and dryness in Argentina and southern Brazil, right on from kind of that September to December time period. As we go into central northern Brazil, the tendencies aren't as clearly laid out. You can have good yield potential, you could have some problems. The bias is a little bit more toward good yield potential. But here again, I think the expected problems in Argentina and southern Brazil is another reason why it's essential that we get a trend yield for soybeans here in the United States. Corn acreage this next season should expand by at least 20% in Argentina. If they are warm and dry through their growing season, then here again, that sends more export business to the United States. If the rains come back in January and in time to save their yields, then that could displace a lot of corn exports. I do think that we'll have a little bit more active export program probably in the November, December time period if all the export slots aren't filled with shipping soybeans. But overall, that's what I anticipate now for South America. John asks, any production concerns for China or India? Any thoughts on Australia's wheat production? First of all, Australia looks to have a good crop. There's a few dry areas, but overall they should have a real good crop, probably not 26, 27 million metric ton level. As we look at China, they are seeing some flooding problems, largely outside the key production areas. Overall, the crop's looking good. India seeing some excessive flooding problems more focused on the soybean producing areas, maybe a fourth of the soybean producing areas. This is something to watch. Typically, we don't impact production that much with flooding unless it's very prolonged, or like in Argentina, it's happening during the harvest period. We're not there yet. So I'm a little bit skeptical about saying too much about any big production losses in India. But here again, with a very tight global balance sheet, this is something we need to keep an eye on. Now from my friend in Australia, Corey, where it's after 4 in the morning and he's watching today. He says, is La Nina a greater risk to the current crop or does it have a greater potential to impact the following year's crop? And so I guess it depends on what part of the world you're talking about. Obviously for Argentina, southern Brazil, it's this upcoming crop. Here in the United States, it depends on how long it lingers and the intensity of it. If it is simply a brief La Nina episode that finishes up this winter, then probably not much impact. If, however, it does continue to intensify into the spring and the early part of the next growing season, the impact could be much more significant next year. And of course, the impact is also influenced by sea surface temperatures in areas like the Indian Ocean, the Gulf of Alaska, and the area off the west U.S. coast. Susan asks, locally, and she's in southern Ontario, so that means I'm aware of people from Canada, Australia, South Africa, and Mexico, and France on board. There's probably more. Locally in southern Ontario, demand for China for old crop food grade soys has been down for 2 years in a row. Why do I keep seeing charts and numbers that show an increase in holding in demand? Is it the only reason of getting their food elsewhere? Yeah, I think that's all it comes down to. Their demand is solid. And most of the soybean increase in demand outside their domestic production, the exports that we're seeing, the imports, are largely for crushing for livestock feed purposes. And I think they're producing a lot more of their domestic food-based soy domestically there and getting it from other markets as well. Excellent question. Glad to have you on, our Canadian friends. Wes asks, do you see wheat basis as having to do the work of movement with loan rates, providing a floor for producers and slowly selling on the board and slowing selling on the board as wheat goes to loan? Absolutely. Southwestern basis levels already $1 plus under September wheat. Absolutely, it has been terrible out in the plains, the low basis levels, taken to cash prices below marketing loan levels, and now it's up to the basis to do the work. Typically what we see that to do to start to firm things up is the farmers lock up supplies in storage, and then the basis has to try to pull them back. And that goes into influencing those posted county prices. And so with basis that weak, normally when we go into marketing loan, we would expect a floor in the board, but with the board so far above the cash, that gives it some room to fall yet. And so if corn does go lower, if the conditions are good for lower corn prices, wheat futures could see some more downside risk as well. So we need to respect that risk of lower prices. With that, our questions appear to have finished for today, and so we're going to conclude this presentation. Appreciate having you with us, and we'll be back following the August crop report with an update, and that'll be the first report based on actual field surveys by USDA of the U.S. corn and soybean crops. Once again, thank you for being with us today.